Yeah, I don't think there's anything they can do uh, to stop the price appreciation. They can try to slow it, and I mean they've been doing that for years, years and years. Uh, we're now at the point where the physical markets are making price as opposed to the paper markets. I mean, there's a battle going on right now, and the winner will be the physical markets, and the loser will be a collapsed and defaulted paper market structure. My guess is, how do they prevent the little guy from becoming wealthy? I think it's a pretty obvious answer. Is what they're going to do is they're going to put a massive tax, who knows, maybe 90% on.
Iste Duzenlen Miss Holly. Good evening, investors and economic enthusiasts. Today's breaking news for precious metals stackers dives into a compelling message from financial analyst Bill Holter, who urges immediate action for those holding gold and silver. Holter warns that while both metals are key assets, they're subject to very different risks, especially in a crisis situation. Let's get into the details of his advice and what it means for your portfolio. According to Holter, gold is more vulnerable to confiscation than silver. Those holding gold bars or foreign gold coins could be at risk in a government-driven confiscation event. However, pre-1933 gold coins, classified as collectibles, may be exempt. For silver, the risk is considerably lower, making it a safer bet for those looking to protect their assets in uncertain times. In a broader economic context, Holter highlights surging demand in China, both for gold and especially silver. China's silver demand has reached an all-time high, with import levels soaring and prices in Shanghai surpassing.
It's are taking over as far as becoming the pricing mechanism. That's what's happening. There's a $30 to $50 premium in gold on the Shanghai over London, over the COMEX. And in silver, last week it got up as high as $4. So you're talking about more than a 10% premium in Shanghai versus COMEX versus London. And that is it's a slam dunk no brainer. You buy silver in the West, you demand delivery, and you sell it and then send it for settlement in the East. So yeah, the physical markets of Shanghai, of China, those physical markets are taking the pricing mechanism away from the West. Something nobody is talking about right now is that for the last, call it 6 months or more, uh, the amount of the debt creation in China has gone negative. And at the same time, their M1 money supply is shrinking. Understand they have a huge amount of debt also. I mean, they're they're also a debt problem. And I made the comment a week or 2 weeks ago that someone somewhere had better start cutting rates and easing and creating money supply, reflating, if you will. Somebody somewhere had better reflate, or this whole thing is going to come down. And I've said all along, when it comes down, it's going to be a 72-hour event. From typically Eagles were about 7% over spot, so there's been a small uh, movement down in the premiums for gold. There's been a huge drop in premiums for silver. If we were talking a year ago, silver Eagles were $17 over spot. Now you're looking at $7 over spot. I think they got down as low as maybe $4.55. Junk silver, which was $11, $12 over spot, you can buy junk silver now for $2.50 over spot. So the premiums have collapsed, and I'm speaking now from a U.S. perspective. So I'm not speaking in Europe. I don't know where the premiums are there, but the premiums have collapsed, and I think that's a function of retail. Retail, I'm seeing less people contacting me, whether it be by phone or email or whatever. but I am seeing much larger orders. So the the dollar amount may be higher, but you're not seeing the offer or inventories peppered by 5, 10, 25, $50,000 trades. Now they're 100, 250, $500,000 trades, but the retail premiums have come down, whereas from an institutional standpoint, you can see China is just gobbling up gold and India is gobbling up silver.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Those in Western markets by up to 10%. This growing demand is projected to impact global silver prices, which could lead to production cost hikes in essential industries like electronics and solar panels, putting further pressure on Western economies. Addressing investors directly, Holter emphasizes the importance of keeping minimal cash within the banking system. He points out that gold and silver are not just investments, but shields against financial instability. These metals carry zero counterparty risk, meaning they aren't dependent on the stability of banks or other financial institutions.
It basically comes from thin air. It comes from the Treasury issuing the bonds, and some market buying, and a huge amount of Federal Reserve supporting the Treasury market. So from a fiscal standpoint, we're extremely loose. We're looser now than at any point in history. And I will understand the economy, and I'll talk about the United States. The real economy in the United States, I guess you could basically say, exists only because the stock market is providing, if you want to call it wealth, the feel-good effect. People are still spending some money because of the stock markets, because of the financial markets. When the financial markets collapse, the United States is complete toast because we don't have any manufacturing to speak of. Our manufacturing base has shrunk. Compare today to 50 years ago, we were the manufacturing king of the world. Yes. Now we don't manufacture anything. So without a robust financial market, the real economy collapses. And it used to be the other way around. It used to be that the real economy supported the financial markets and gave justification for pricing in financial markets. Now it's the other way around. Now it's the tail wagging the dog. I think it's becoming, the math is becoming too obvious. The math that these treasuries or sovereign treasuries are not going to be able to continually expand debt. The math is so obvious that now you've got well-known people talking about that problem. That problem ultimately leads to interest rates going straight up. And I say interest rates going straight up because at this point, I don't think anywhere on the planet with a sovereign treasury is there a risk-adjusted premium for the possibility of default. It's thought right as we speak now. It is believed across the world that no sovereign treasury can default. So there's no risk premium. And in my opinion, there is in the future going to be a risk premium, and that's going to cause interest rates to explode because there's more risk everywhere than anyone even contemplates. So I think it goes further than what the Ray Dalios of the world are talking about. He's looking at it near term and saying, well, this is unsustainable. If you look at it longer term, yeah, it's obviously unsustainable, but that leads to a collapse in bond prices across the globe and a huge spike in interest rates, which just blows up all the existing debt. But there were three charts: gold, silver, and the HUI mining index. They all looked like they were forming a hook on the MACD. That's the moving average convergence divergence. It looked like they were crossing over at that point in time. They did cross. Silver, I think, was 28.50 in that neighborhood and ran up to 32.50. We've had a couple pullbacks. We're chopping at this morning. I think we're about 30.50, and it wouldn't surprise me to see a test of a harder test than we've already had of 30, maybe 29.75, 29.50. I do believe that you'll see that what was resistance turn out to be support from here, and it would not shock me within 3 to 6 months to see silver in a much more serious battle at the $50 level.
What do you think of Bill Holter's take? Do you agree with him? Will retail stackers get a massive tax on wealth if a debacle occurs? Post in the comment section down below your honest opinion and watch this video right here because it's a perfect fit for you. I see you on the other side.
Institutions. Holter's message is clear. To secure your wealth, minimize your reliance on the traditional banking system, and prioritize assets you can hold independently. To wrap up, Holter urges immediate action. Swap your assets for physical metals today. He advises focusing on silver eagles or junk silver for silver and pre-1933 gold for those holding gold. He believes this strategy will better position investors when, not if, the current economic system faces a major reset. In summary, Bill Holter's message today is a call to arms for gold and silver stackers, emphasizing protection against potential economic upheaval. As China's demand for precious metals grows, now could be a pivotal time to secure your assets. Thank you for joining us today. This is a reminder that your financial security is yours to protect. Take action, stay informed, and safeguard your future wealth.